Hello everyone, welcome to Blockchain VC September Research Talk 1. This month we have 3 research talks, and this is the first research talk this month. And today we have Luyao, Sunshine Zhang from the Duke Kunshan University. And Luyao is an assistant professor of economics and senior research scientist at the Data Science Research Center at Duke Kunshan University. Her current research interests are at the interplay of computational and economic science around the application of groundbreaking technologies, including artificial intelligence, blockchain and cryptography, and innovative computing. She has an embedded passion for interdisciplinary collaborations, especially for cutting-edge research of both profound insights and practical impacts, including computational economics and social science, crypto and token economics, behavioral and experimental economics, explainable and cooperative AI, and interdisciplinary big data. So today she's going to present her research on decentralized finance specifically, and the title of her presentation is Decentralized Finance Actually Decentralized? A Social Network Analysis of the Aave Protocol on the Ethereum Blockchain. Without further ado, let's welcome Luyao. Over to you. Thank you very much.
Yeah, thank you so much. Let me start its presentation. Today this talk is about whether the system is actually decentralized, because Ethereum blockchain has been the biggest promise of bringing a decentralized world. So we hope we could make it better and truly decentralized. Let's first start with the introduction of my co-author. So this research is very interesting. It started with our joint work with Ziqiao. She was our undergraduate advisee at Kunshan University, but now she's already a graduate student at Northwestern University. And also with Gergely, who is an expert in social network study and just promoted to be the division chair of our social science division. So the background is, although we have claimed the blockchain has provided the peer-to-peer transactions, however, it's like distributed in theory, but the level of the decentralization level, the realized level, is actually largely unknown. And there were a lot of descriptive studies trying to measure the decentralization of blockchain from different facets. However, there hasn't been like many systematic studies on that. Before blockchain technology, it's very interesting, like in the finance world, when market is decentralized, it tends to perform worse, because intuitively we want to have the efficient hubs like New York and Shanghai as a financial center. And also for companies, we hope to have like large corporation with core hubs to make it more efficient governance. So before blockchain technology exists, the hypothesis is when market is more centralized, it's likely to be more efficient. However, since the biggest promise of blockchain is a decentralized economy, so we are also thinking maybe the hypothesis could be different. However, we need to test for it. And in terms of measure the market's decentralization level, in traditional finance, there were a lot of study already that applies the social network features, this kind of like interdisciplinary methods to measure the level of decentralization. So we are thinking maybe we could apply the similar methodologies to measure the decentralization level of the decentralized finance. So because of this background, it sounds like executable and important. So we have 3 research questions. The first research questions is, are transactions in the decentralized bank on blockchain are actually decentralized, distributed peer-to-peer or not? And the second is how do different network features of blockchain transactions correlate and change across time? Because even for social network features, there are tons of measurements. So they intuitively provides us with same results, same indications of being decentralized or centralized, or like the difference is in like more details. Finally, is the counterfactual impact evaluation. So how does the decentralization level actually affect economic performance? Is this the same as in the centralized finance, that when the network is more centralized, is more likely to have harbs, the economy is better? Or because people who involved in this economy have more faith in the decentralization, the result is otherwise. And also for market volatility, which is an important feature for financial stability, whether when the market is more decentralized, it tends to increase the financial stability or decrease the volatility in the long run. So we hope to test it. So those are the research questions of this study. The main result is very shocking. The first is in a core-periphery analysis, which is analysis to detect intuitively hubs in the traditional finance. We find that actually we have the hubs of two centralized crypto exchanges, which are Coinbase and Binance. So it turns out, even though we have a big promise on the decentralized finance to be decentralized, right now we have more work to do to make it truly decentralized, because the cores are the two centralized exchanges. The second thing is we have evaluated the network's dynamics using multiple network features. In general, we observe the moving like consistently, like in the same direction of the implication the market becomes more decentralized or more centralized. And finally, we also find a more decentralized network significantly predict a higher return of the DeFi token, which is like a new results, different from that in traditional finance, when in general, a more centralized network, a network with hubs is going to have higher return. But we have similar results with centralized finance on financial stability and volatility. So when the economy is more decentralized, we tend to have like lower increase in the volatility for the future. So it's kind of like the story for this work. And let's first have an introduction of the data we are using. So what we are studying is this Aave token. So this Aave token, Aave is a decentralized bank deployed on the Ethereum blockchain as smart contracts. So for this token, once you own it, if you want to get Aave token, you could get it either from airdrop, or you ask some friends who have this token to transfer it from their Ethereum wallet to your wallet, or you buy it from centralized exchanges using other crypto tokens or fiat currencies. So in order to use the token for exchange, besides you could transfer peer-to-peer, or you how you do exchange with it. You can do exchange in two types of markets. One type is centralized exchange. So those exchange are not, if you transact on those exchanges, you are not necessarily transact on blockchain, because you have to trust those exchanges will finally clear your transaction and record it on the blockchain. There is significant risk to transact on the centralized exchange, because in there, a typical example is FTX bankruptcy, which FTX is a centralized exchange. When it gets bankrupted and your transaction were based on that bankrupted centralized exchange, then you would lose, has a potential to lose the money, and the risk could be higher than in the centralized exchange of our traditional market, because traditional market is more well regulated. However, the centralized exchange for crypto is in general not well regulated, and it's not directly protected by the infrastructure of blockchain. So there is high risk there. The other way you can do exchange is on decentralized exchange like Uniswap, which is the largest one. And for Uniswap, it's automated market maker. There is no centralized entity who is providing the trust. Anyone can become the liquidity providers to open a market there. For example, you could open exchange market there by putting two paired currencies like Ethereum and Aave. And then according to some math formula, other people will be able to send one of the tokens to the market you created and gets the other token. So if you transact in the decentralized exchange, you don't have the risk of the centralized party, because it's in general protected by the consensus algorithm of the blockchain technology, and by smart contract, which is a programmed code that's open source and transparent. Everyone can check it. However, you also have the risk of something in the DeFi market called a minor extractable value, or front running, which means when the miner who has the power, or now Ethereum blockchain becomes a validator to record your transaction, they actually have that temporary power to reorder the transaction, either exclude your transaction or reorder it, or do something else. So it could take advantage of you. So in general, the two different exchanges require different trust. One is more on the centralized entity, which is less regulated. The other one is more technology. So if you know the technology better, you know how to protect yourself from people who has better technology in this space, you will be well protected, because you don't need to trust a third party. So this is how you do a transaction with Aave token. You can do it on the two markets. But very interestingly, with this Aave token, you can do more than exchange. So we had just talked about the exchange, which includes transfer. So you can also directly send it to friends, like Changlu could directly send it to Victory, and Victory could send the Aave token to me. For the swap, we just talked about it could be on centralized and decentralized exchange. But beyond that, there are other functionings when you see this Aave token is performing a transaction. And the number one, because it is a token issued by a decentralized banking protocol, so it has the utility to do performing lending. So you could, a user, you could deposit the Aave token to the Aave protocol as collateral, and this allows you to borrow other assets from the protocol. It's kind of like from a bank, you deposit your real estate as a collateral. You will be able to lend US dollar out of it. And you could also withdraw your assets from the lending protocol. And you can borrow assets from the protocol. You can repay, and when it's kind of like the assets value, because the price might change. So when the price of the Aave decreases to a certain level, liquidation threshold, your Aave token might be liquidated. It's the same as like if you use your house as collateral in a bank to borrow some money out, but when the price decreases, it's getting liquidated and auctioned to repay the debt. So that is important functioning because it's a decentralized bank. You also have another functioning that's staking. So you could stake your Aave, that is temporarily. You could not be using it as an exchange or other functionings. You staked it in the system, so the system could use your Aave as a backup when the Aave price decreases and the system went to a safety mode. Why we need this, you can think of during financial crisis, if everyone is withdrawing money from JP Morgan, then it's the price is decreasing even faster, and we might end up with financial crisis. However, if people has committed to stake the money in the system, it makes the system safer. And in this case, you will also be able to get a reward from the system when the whole system appreciated and gaining revenues from different channels. And it could also be unstake. You decide at this point, I don't want to stake anymore. And last but not the least, Aave token has a very unique functioning of participating in the protocol governance. So what does this mean? This means Aave is a decentralized bank. Traditionally, if we want to change the policies, the rules, the interest rate of a bank, right? So we need the shareholders on the trustee board to vote based on the shares you hold. But here, when you have this Aave token, you are the stakeholder of this system. It's like a governance token. You will be able to propose changes to this protocol, and you will also be able to vote for the protocol according to the numbers of tokens you are holding. So those are the different functionings of the Aave. Worth mentioning, like more technical scholars, I would really be curious and hope to see in the future, maybe someone like dive into the details of how the decentralization of the different functionings differs. Because for us, we find, since it's a first study, and because we also find the technical cost to differ, distinguish those different kinds of functionings in the transaction is very high. So right now we kind of like did not distinguish the detailed functionings. In this work, when we are doing the social network study, the node is the address joined the transaction, either the from address that's sending the Aave token or the to address that's receiving the Aave token. And the edges of our social network is the transaction. So our transaction could be exchange functioning, lending functioning, staking, or governance. So it would be very interesting if in the future someone dive into the details of each of the functionings. So is DeFi really decentralized? This is kind of like our main shocking results. We did not expect it to be this result because firstly, when we get this core-periphery analysis, we are trying to find, okay, whether there are certain addresses that are identified as the core of the system. For the majority of days, we did not expect we would find any at all. And then the first result is we find there are actually two addresses that does not belong to the contract account of Ethereum. So contract account is just this is an address, but it's not an address that's holding tokens externally. You can withdraw and exchange the token with something else like a US dollar, but it's just a contract functioning. When you send an Aave token to it, it's performing a certain functioning like borrow lending. So it's not the contract account, it's an external owned account, which means this account is like the traditional bank account that's holding assets. So we are very shocking to find the two like addresses that's holding large amount of this Aave token, and it's dominating comms for most of the days. And then we start to find what are those accounts, and we think, okay, maybe the blockchain is anonymous. We will not be able to find out who they are, like they are like Satoshi Nakamoto. But it's just so easy because it's labeled account. It's just from Coinbase and Binance. Both have the dominance of days in a year to be the core. And I will explain in more technical details later. So what does it mean by core? But this is the shocking results to kind of like keep you in suspense first. So in terms of the contribution map, we would see in this system of the decentralized finance studies, there are several works. One types of related work is on the cryptocurrency. So it's kind of like pick one or several tokens and trying to study whether there are new ways of investments in the cryptocurrency that's giving higher return of investment. So it's more about financial management, adding the crypto assets. And the second, for Aave, we also have results and on the return of investment, so it's related. But our unique contribution is we generated a new technical indicator that's and not only one, actually many social network features for you to do the investment prediction. The second one is for social network studies. There were a lot of studies like this in traditional finance. There are few in decentralized finance. So we kind of like apply it to study the decentralized bank, and that's our new contribution. Finally, it's for the market evaluation. For this, there has been a lot of studies on return of investment, market stability in traditional finance literature, and there are also someone's studied the impacts from decentralization, but it's more in the traditional market. So we kind of like extended to the DeFi market. So those kinds of like the contribution map. And then, so for the data source, previously we had used 3 data source. Worth mentioning, you can now have much more data source. So for the economic metrics, we used the data source from coin metrics, but for economic variables, you can find it on a lot of places now. So such as like the CoinGecko and the coin market index. So there are many places. And then for the total value logs and other DeFi index, we find it from DeFi Pulse. There are also now DeFi Llama. So you can find the data, open source data from more places now. And finally, for the Ethereum blockchain's data, you can actually running a node and query it directly from the Ethereum blockchain. Previously, we had used this tool, Google BigQuery public datasets, and we also leveraged the Kaggle notebook. So Kaggle is a plan for like data science students often use for the hackathon and competition. The good thing of doing this is because if everyone is running the nodes to query the data, it's actually very environmentally unfriendly, even though it's like very good to do that to check the validity of the data. But because there are many sources querying the data, so the data on the public data sets is in generally trustworthy. We had checked the validity for a few days, but in the end we find, okay, when we're using Kaggle, we can automatically update our network feature and coding even without any cost. So in the end we used that, but there are so many other ways to query the data now, including some like more advanced database GraphQL. There recently another data source called BigQuery. I'm using it for my updated new research. And our methodology is 3 parts. One part is more on the graph analysis for the network features. For this, we mainly using the Python network X packages, which is convention in the network study. And then for the core-periphery structure analysis, we used another packages to detect the core-periphery structures. So this analysis was originally from physics. And finally, we did some time series regression, auto-regression analysis. So this also used Python packages. Worth mentioning, all our code and data are open source on GitHub. So feel free to check it out and apply to your own studies. And now let's see the result. Before I give the result for the network features, let me just have some brief introduction. So first, you can see this figure that shows on the left-hand side, shows different types of network structures. So the first one is centralized. You can see you have a central node in the middle, and then other nodes like as a peripheral. The second one is called decentralized. You can see you have a lot of small centers, small heart. So you can think of this as a star cities in a big city like New York or Shanghai. And the last one is distributed. In this case, you don't see the difference in terms of positions and centrality of the different kinds of nodes, and it's truly distributed. And in terms of decentralization or democracy, the last one is the one seems we prefer in the decentralized world. Worth mentioning, so you can also see this figure in New York, in the Solana blockchain's center office. I saw this picture there as well. Maybe I should put that picture here. And then we have different kinds of network features. We have more in the appendix of this paper, but we picked several. That's kind of like the major features, and we think it has intuitively the implications for decentralization. For example, for numbers of nodes and edges, it's very straightforward, right? So number of the nodes is how many addresses are joining the transaction. I have to mention there is some limitations for decentralization detection in this space because the addresses on the Ethereum blockchain are anonymous. So the decentralization level we detect is actually the highest bar, I would say. Because maybe there are just 2 people like Chang Lu and I are transact in this space, but I could create 100 address. He could create another 100 address. So you think there are 200 people who are doing the transaction. So you would see the number of nodes to be 200, but in the case, there could just be 2 people in this space. So the decentralization level we detect is already the highest bar. The true situation could only be equal or worse. And then we have the number of the edges is like the transaction performed in this space. And we have component counts. So component counts is the algorithm groups the more frequently transacted nodes into the small groups of each other. And when there are more components, we would think the space is more decentralized. And we also have giant components ratio, which is a relative index that indicating the size of a giant components divided by the total numbers of nodes in the daily transaction network. So which you could thinking of the size of the giant components to be the financial hubs, like the people who do transaction in New York, Shanghai, Hong Kong, London, and then divided by all the people who are doing transaction in the whole world. We also have the standard deviation of degree centrality. So you would imagine if the standard deviation is larger, then this space is more centralized because if everyone is equal, like the distributed one, we should have the standard deviation ideally to be 0. And then we also have modularity. So modularity is a network with a higher degree of modularity, has dense connection between nodes within a module, but sparse connections between nodes in different modules. So you can imagine, right? So when the modularity is higher, it's kind of like the Chinese group, US group. We are making these small groups connected with each other, but we are actually not communicating outside our groups. So that's more centralized. And we also have several features regarding core-periphery analysis. So when the core-periphery is significant or has a higher p-value, then it's more centralized because which means we are detecting there are a lot of cores in this space. So those are in general the network features we used in this study. We picked from tons of features, which also the code is also provided on the GitHub. So for the rest, we did not explore further because we don't see intuitively either a close connection with centralization or decentralization, or it's too complex. But we encourage future scholars to follow up on those details. And then we have this correlation map of these features. We can see for the feature we pick, they are likely to be highly correlated with each other. And the direction is also correct. For example, we can pick 2. These components accounts, right? So that is when the components, there are more components, it's more decentralized. And then we can see it's negatively correlated with a giant component ratio. Because for the giant component ratio, it's vice versa. It's when it's larger, it's more centralized. So giant component ratio is larger, it's more centralized. Component, when it's higher, it's less centralized and more decentralized. So you can see their correlation coefficient is negative 0.72. And if you check all the pairs, you would see it intuitively affects the direction to centralized and decentralized. They would not be correlated to be 1 because details in the measurements, that's different. And this plot were the result we generated one years ago. We also have an updated figure. So in general, you could see the trend is there are a lot of noises in as well, but the trend is when the product first launch, it tends to be first more decentralized, especially at the beginning. There are a lot of airdrops. And people may be joining this space because of hype or something else. But unfortunately, in the end, it's going to converge into the original levels of centralization or decentralization. So in general, and for the features that's positively correlated, you could see its first increase and then decrease. And for the features that's negatively correlated with the decentralization level, you can see it first decrease and increase. So the implication is the same. For example, right, so we mentioned for the number of components, when there are more number of components, we think the space is more decentralized, right? So it first increases, but then decreases. And for the giant components size ratio, we are saying it's negatively correlated with this decentralization level, and it first decreases and in the increases. And if you evaluate the other measures, you can see it's all providing the similar implications, even though there are some noises, and the noises are also very interesting because there must be some incidences, events happening. And for that, now we are doing actually updated research on the impulse response, like how the different events is affecting the decentralization level in the short term and long term, and how long this effect lasts. But in general, you see a trend like this, and And we are wondering what's going on and how we can make it better, how we can make the system not just become decentralized at the beginning when people have the hype, but how to sustainably making the system more decentralized. And this is the updated figure until the end of last month. And the trend does not change. However, you could actually see there are some big like volatilities recently at the beginning of this year. So at the beginning of this year, since Changlu, they also have a firm about security auditing. So we know at the beginning of this year, we have like a lot of events, like security events. So that might be affecting the cases. But we also have some positive events like the Ethereum improvement proposal, and like Aave is launching on the layer 2 and even on the different blockchains. So the effects might be very mixed. There are positive and negative events on the decentralization. So we're updating those events in the future study session of our paper. And we also encourage you to study those impacts. And now let's get a close look, secondly, to the core-periphery analysis. So first, just intuitively providing everyone how you are actually constructing this core-periphery structure. So for example, for this figure, it's from 1 day's data. You can do the core-periphery figures graph. And on the left-hand side, it's a graph that looks more centralized, right? Because it has smaller numbers of cores in this space. So you can think of those cores, they are like the financial hubs in the world. So there seems to be the financial hubs in Aave tokens transaction network as well. But when is the left-hand side figure? It is when Aave just launched. So it is 2020 October 12th. And then after like 4 months, you can see it's actually becoming much more decentralized at the beginning. So in general, what does core mean? Core means other parallel nodes are likely to do the transaction with the core, and then the core are connecting them to other parallel nodes. So parallel nodes always do transactions indirectly through these core nodes. So that's the definition of core and powerful. And then so this is a figure again. So the bad news is we find for the external owned account, here the transactions, the edges, including all the functionings, including exchange, lending, staking, and governance, including all the types of transactions, Coinbase and Binance are the dominating coins. This is very scary, right? So because for transaction, it's very direct answer. Like we in a DeFi space, we wanted the transaction to be more decentralized to eliminate the intermediary cost. But now it turns to be Coinbase and Binance, who are even less regulated than the centralized bank. And for the banking functioning is very shocking as well, because this is a decentralized banking protocol. We also hope like users could directly interact with a bank or each other than through the centralized exchanges. And for governance, it's even more important because it's like previously we criticizing there are only the shareholders who are managing the bank, the company. And we are criticizing they might not be thinking of social responsibility because like it's not likely they would directly put themselves in the user's shoes. However, it's their own bank. They have their own reputations, right? So they would still care according to the reputation mechanism. But now when it becomes a stakeholder economy, and if in this case you are having the coin, you lose the traditional mechanism of reputation and self-image and responsibility, entrepreneurship to sustain the good cause of governing for the ecosystem. And if you did not actually reach the decentralization level you intended for, then it's kind of like a little bit cursed. So it seems we cannot assume a decentralized finance to be decentralized. It seems to be not decentralized in all the kinds of aspects. We need to improve it. It has the great potentials for us to contribute. But on the other hand, for the contract account, we indeed see people use the decentralized functioning a lot as well. So the two coins are the Uniswap. People are doing a lot of transactions with automated market maker. And people are stake Aave tokens in this system. So when the system goes into the safety mode, that is the story I talked about, financial crisis, the system could recover because people staked the Aave token. So we, even though it's not decentralized enough, it has a big potential for us to contribute. We also need to acknowledge it do also have a lot of decentralized functionings people are actively using. So we need to acknowledge their contribution to this space as well. And then to just provide more intuitions on the validity of the data. So for the core-periphery analysis, we have the days when the core-periphery structure is significant, but we also have the days when it's insignificant. So when it's significant, there are Coinbase, Binance. When it's insignificant, means there are no Coinbase and Finance as a core. The system is decentralized. So we could see the number of nodes in the core is smaller when it's significant, and it's larger when it's insignificant. So it's intuitive. So it means our data has validity. Also, when the days is significant, the core has more numbers of neighbors, so it's more dominating the system, and smaller when it's insignificant. So this kind of like a validity check. The intuition is aligned when we are doing different measurements. And now the last thing, so the previous things might be more cared by the technical scholars. The last thing is more closely related to traditional finance. So number one is the return of markets. So in traditional corporate governance papers or assets evaluation, as I said, there are mixed results, but in general, people would expect we want to cultivate the cores in the economy, the hubs in the economy, in order for it to generate higher return. And we find the results to be otherwise in the decentralized market. It's also very intuitive because when people join the decentralized economy, they in general have the faith this system is more decentralized. That has a lot of meaning. It might be people believe it's fair, or people believe it's more secure because it's not like a single point failure risk. But this result is very interesting because it's different from the traditional finance literature. And the second thing is about the volatility. We find when the system is more decentralized, the system is in general, the volatility will be smaller in the future. So this is also very important. It shows, okay, right now the system is not decentralized enough. It has contributed some decentralized features. It has great potential to be more decentralized, which we can contribute. And it's also very important because when it's more decentralized, it's going to have both higher returns, and it's also to make this market more stable. In the end, we could apply the analysis to different dimensions. For the application scenario, we could apply it to other decentralized finance protocols. Like Aave is just one example. There are many other examples, like Aave token, but also lending, other lending token, other decentralized exchange token, other governance tokens. And the second thing is, as I mentioned, there are other network features we haven't studied and other economic variable we haven't studied yet. So you could study the relationship between network features and economic variables in other dimensions. And finally, so in this study, we are more like predictive and descriptive. And from the methodology point of view, since new index, the new performance is generated, you could also apply causal inferences to study like how we could design better mechanisms to make the system better. So especially because on the Ethereum blockchain, there are lots of natural experiments. So here are two directly related research of mine. One is like we have a extension, the measurement. This is only for the measurements part. On the network study, we compared beyond the Aave protocol with other decentralized banks. So this paper were published this year. And we also have another paper that's deep dive into blockchain decentralization in general, applying other easier indexes. So the network features, when you generate it, because you need to create a graph, so the computational cost is much higher. But there are traditional index used to measure inequality or information asymmetry or ambiguity. So those are the things you often heard about Shannon entropy in information theory, Gini index in like economic development and growth, Nakamoto coefficient in industry organization, and also HHI in industry organization. So we have another paper that's produced the more conventional and computationally efficient algorithms to measure the decentralization level of blockchain from different layers, not only transaction, but also governance, consensus, etc. So those are the two directly related researches as well. And last but not least, we have our paper open access on Archive and also data and code on GitHub. And we're currently also updating this study to the latest data and also adding more finance and economic analysis. Thank you so much.
Thank you so much, Luyao, for the presentation. Luyao is currently in China, so she's doing this presentation in midnight in China. So we really appreciate her dedication and commitment to this event. And any questions from the audience? I see in the chat that Vicky had to leave early because she had another meeting. Trent, do you have a question?
First, say hi to Luyao, Zhang. Like, not really a questions because this is beyond my scope of research and it's very quantitative in nature. But I just want to give a huge compliments for very comprehensive, how comprehensive the research is, and I really like the chart that you show your research contributions to the literature. It shows like how strong you understand the literature, and I think I will learn a lot from that.
Yeah, I definitely share the same observation with Tran. I think this research is very well done. It's very thorough, very detailed, and all the considerations in terms of like methodology, statistics are very well carried out. So yeah, kudos to you, Luyao. Very well done.
Thank you.
Yeah. Okay. So I see that we are on top of the time, and also I know it's very late for you in China. So I guess I will let you go, and later we will upload this this recording to our website so that you can share it with your colleagues. I know that because right now it's in China, so probably most of your colleagues and students were not able to join on this talk. But once we have the recording, I will share it with you, and so that you can share it with others in your circle.
That's highly appreciated. Thank you so much. Hope next year I could come in person.
Sure. Yeah, that would be wonderful. Yeah. Thank you again.
Thank you. Bye.
Bye-bye.